Welcome to part 2 of our 5-part series on minerals in 2020. Thank you for joining us and listening in, and thank you for partnering with Enverus. General disclosure slide, and then admin notes. So please write down the number of the slide that you have questions on. It makes it easier for our team to answer those questions you do have. If you have any questions during the presentation, feel free to chat them in, and we will be answering them after the webinar in a follow-up. We generally get questions on whether or not the deck will be made available. We leave that up to your account representatives, but all you need to do is ask, and they can get you the information you need. So welcome again for those that do not know me or who did not join part 1. My name is Phillip Dunning. I work on our corporate strategy team, focusing mostly on acquisitions and integrations. So those who have been partners with Enverus for a while know we're pretty busy into the M&A space with 12 plus acquisitions over the past few years. Now, unlike most other companies that conduct M&A, most of you can actually have a pretty hard time naming all the ones we've done. And that's actually what we want. It means that we have done our job correctly of integrating the solutions into your everyday workflow, bringing value without adding complications. And today we're going to be talking a lot about some of those various pieces and parts that have been brought into the system over the years. Now in this series, it's obviously comprised of 5 total parts. I already did part 1 last week, which is on demand if you need to see it. We have part 2 this week on lead generation. Next time will be Rob Zimmerman, who worked as an asset manager in the mineral space. He's going to be doing due diligence. We have James, who's the founder of Q for underwriting. And then Jay Snodgrass, or I think actually Elliot Stone will be joining us from MineralSoft and walking through the diligent mineral management portion, as well as how to use that portfolio effect to affect the other parts of your business, so risk mitigation and then lead generation as well. Now, between the 4 of us, there's been hundreds of millions of dollars put to work inside of our prior lives in private equity, mineral management, etc. So we've all put our own money to work in the space, and we're really excited to be sharing these insights and knowledge with everyone. So the agenda for today, we are going to start out looking at our definition of outbound versus inbound lead generation and some of the nuances of both of them. And we're going to take a deep dive into the specific databases that can help you with outbound lead generation and risk mitigation, which we kind of discussed a little bit inside the first webinar. And much of what we discuss uses Enverus data, but it's manipulated and used inside some other third-party systems. We really want people to understand what can be done with the data outside of the system and outside those standard workflows that most people are used to. And then we're going to hit on part 3 preview and take some Q&A. So let's get started. Now, during the first part of the webinar series we did, just as a brief recap, we talked about activity tracking and risk mitigation. Now, activity tracking, I think, is going to be new to most people because it's new to the Enverus system in general as we move over into Prism. And what we're looking at is the idea that Enverus, or Drilling Info, as some of you might know it, over time has really been the leader in activity tracking and trying to get you guys kind of ahead of the bit. And if you think about it, the first thing we did, right, was just put permits on a map. It's astonishing that, this was years before Google Maps even came about and other companies were even contemplating the idea of a map-based system. The second version was in about the 2015, 2016 timeframe where we had GPS units on the dog houses of the rigs, which we still do today. And that obviously allows you to know daily where the rigs are, which, can obviously help in various activity tracking and kind of de-risking of what's going on. The third version of this is what is currently released, and additional features are being released over the coming months. And that's the idea of using other data sources that historically have been used by hedge funds and other private equity funds, to do retail tracking, traffic, patterns and things like Google Maps. And it's using, our standard Enverus data, all the regulatory data that goes in, kind of the rig information of daily rig activity, as well as satellite tracking for construction activities that are going on, moving dirt, things like that. And then this idea of tracking other signal types that can give us an indication of activity happening on a pad or within an area. And so really what we want people to understand just, as we go forward is that this will be, kind of bringing some additional tools to clients that have access to this, things like where are frac crews, where are new pads being constructed, pre-permit, right? All these little tiny nuances that are very difficult to generally glean information from. That is what this system is going to help doing. So again, we've already done version 1, version 2, version 3 is going to be even better. So I'm super excited for everybody to be able to see this over the coming months and to talk to your accounts about it as it comes out. And obviously, kind of inside the COVID time frame, we know that a lot of people are kind of either shuttering or just not doing as much. We are leaning all in on this from the standpoint that we know that when activity is down, it can be much more complicated to know what is actually going on, meaning that there is less overall activity, and so you need to be more spot on what's actually occurring. And obviously, less rigs means that when we do ramp back up, it'll be on the completion side. And so, trying to get ahead of all those little tiny bits and pieces of information is what we're trying to get to. So, we're excited to be seeing that coming to fruition. All right, so inbound versus outbound, the bulk of what this presentation is about. All right, so inbound versus outbound. The difference is really you. It's the buyers. So inbound leads, right, are generally due to presence in relationships. After you've spent enough time in a basin and word of mouth gets around, you'll generally be the first ones owners call, or at least a resource for them to fact check other outbound kind of information that they're getting. SEO and digital marketing can also help. Some of you guys spend $20 a click. Others of you have really good search rankings when looking up selling oil and gas minerals. That is all the idea, right, of an inbound lead coming into you guys. And inbound, is not something you can rush, right? It has a real time component to it, and it can be destroyed very quickly by something like lack of integrity, right? Getting some bad word of mouth out there. Now, outbound, on the other hand, is really the most common way owners receive offers, and if we really are kind of honest about it, it's also the most annoying way, right, that they kind of receive these. And I don't think we're hurting anyone's feelings, right, on this call when we say that marketing via mailers is all about volume, and you have to be okay with not always being liked, right? These owners get dozens to hundreds of these mailers, and obviously we all get junk inside our mailbox, and it gets a little bit annoying, right? So just don't take it personally. It's all part of the business. Now, outbound lead generation is about one of two things: pure volume or targeted volume. So pure volume is what we would call spray and pray. Spend thousands, touch everyone, maybe something drops. The problem is the CRM and IT infrastructure you need, in order to maintain that healthy pipeline that isn't all junk. And you also have to spend a lot of time sifting through junk. And when we look at the average close rate, down the funnel, it's less than 1%. About 3% maybe will respond, and then, you'll get about 1% of those. And that's, kind of this idea of spray and pray, right? You're just hoping a couple people will make it through your funnel. Targeted outbound lead gen is becoming much more common. Researching, and providing owner-based valuation quotes, staying focused on one county or region, even door-to-door knocking. And some of you have even hired college students to make them outbound call owners to generate leads. And at the end of the day, a healthy dose of both is really what makes a mineral company thrive. If you provide owners with the right information, a fair value, word-of-mouth spreads, which leads to more inbound lead generation. All right, now lead generation. So we're going to be focusing on outbound lead generation for this webinar, but the same tools and workflows can be applied to inbound leads as well. And realize that many of the workflows are those that we have done prior, within our prior lives outside Enverus, or those that we've advised on, over the time of being here. So they're all created using Enverus data, but do require some GIS and sometimes some basic programming skills. Now, many shops are moving to a more sophisticated workflow, and this is obviously to increase the time they spend on actually evaluating the right deals and not just sifting through that kind of junk. All right, so we're going to start large to small in terms of data set size. So the largest piece of land to help understand ownership and therefore lead generation is the unit. So across the Enverus platform, there are units in all but 3 plays. The remaining 3 are currently being worked on over the coming months and quarters. Now, what is great about units within the Enverus database is that they are tied back to the API numbers So with a little GIS finesse, you can actually consolidate key data from wells onto the unit shape. So what we have suggested in the past as we work on enhancing the data attached to the units inherently is to create a new data set, using the unit name that has the total number of producing APIs on that unit, the total duck count, the total permits that are still active, and then your idea of general PUDs. Now, I showed the table in the bottom right-hand corner during the last webinar. It's an example of being able to roll up by unit name or unit ID, the idea of how many wells are producing, what is my spacing assumption in the area, and then getting an idea of the number of PUDs that exist on that unit. It's a very simplistic form of doing it, but what we're really trying to do is to high grade, because the one part about outbound lead generation, right, is high grading where you want to buy. You don't want to send it to everyone and then get back a whole bunch of responses from people which units you want nothing to do with. So this is all about, again, kind of trying to reduce the funnel in terms of the junk that's going into it. So by attaching this well data to the unit, what it allows us to do is quick and easy filtering. So let's say we want to find all units with at least 2 producing wells, 1 duck, and 2 PUDs. Within the GIS system, right, you can heat map those various data points and get an idea of where your team should focus. And again, to generate those outbound leads you want to go target. Now, for those with a bit more sophistication, you can attach valuations to the units based on PV10 of the wells producing, PV10 of PUDs, PV30, of permits, etc. Whatever the definition you guys have of the value of these various components. And then again, you can heat map this to further refine your areas of interest. So again, when we think about it, the unit data set we generally just look at as a GIS function. However, you can tie the well data to it inside of an outside system, and that then allows you to heat map, filter, and again, reduce the noise of where you want to focus based upon where the most upside potential is. We discussed last time that with the unit, what I used to target was were wells that were producing outside of kind of that initial flash production, right? Kind of inside their steady state flow mechanism. So maybe a well that's about 2 to 3 years old. Again, all of these, kind of filter criteria can be done when you attach the well information to the unit with inside, a GIS system or an analytical piece of software like Tableau or Spotfire. Land track leases, are a great indicator of trends and the quick screening of owners. So after, I've used units with the associated data to query down to an area of interest, I start to look at what leasing trends are showing. Why? Well, permits show an indication of what is being drilled next, or at least used to, right, kind of before COVID. Leases show you where plays are moving to. So in part 1 of the series, we talked about the importance of activity tracking today, since ducts and completions are going to be the primary, the primary activity over new permitted drilled wells. Now, in the top right image, we're showing leasing in the last 8 months versus permits in the last 8 months. Do you see anything interesting about that? Well, there's a ton of leases being taken out where no permits or rigs exist today. Why? Companies are starting to shore up their next play or an extension, because the Permian is getting crowded, right? But there's always going to be room to run. And by understanding where companies are putting money to work, you can better understand where activity will be moving to. Now, land track leases are also a great way to filter out the noise, right? So since mineral appraisal is in arrears, and courthouse filings can be messy, you can filter down the leases taken out in your AOI, export that data, and then target those owners specifically. Now, using depth severance filters, you can also filter out or at least de-risk owners who have either withheld or do not own certain rights. And the bottom left image shows leases in the last year with depth severance parsed out. And you can spatially intersect these leases with the units we talked about to get a better idea of owners within a lease. So it's a little bit of GIS work, but by taking our units that define our AOI, we can intersect with the leases and now have an idea on specific royalty rates, lease clauses, etc. within that unit. So it's a 70% solution, but again, C's get degrees, right? And this can help you make a little bit more accurate offer to an owner. So again, when you think about it, the lease itself can be a a lead generation tool because you know what leases are being taken out and where they are. And as long as they fall within kind of that AOI, that was defined, by our units, it's fair game. They can also be used, though, to intersect with the unit to better understand which owners are within a unit that's been drilled within the last year. And the main reason is that mineral appraisal is not up to date, right? It's always in arrears. And that's what we're going to talk about next. So Texas mineral appraisal, and then we're going to tie it all together and how a single system can be created using these three data sets. And then we're going to talk about Oklahoma next, but we're going to stick with Texas right now at this second. So Texas mineral appraisal is in arrears. While 2020 is starting to be released, it's actually based on 2019 data, right? So tax data runs through about October, so newer wells without production or even with production will not be included. And there are ways around this, right, that we can do. Now, Texas mineral appraisal is received at the RRC lease ID level and is broken down to the API level at Enverus. It makes it easier to filter. However, you can roll it back up to that RRC lease ID for a more accurate analysis. So the data comes in both FTP to load into SQL or another database or via just the standard web application. Now the data comes into us very, very raw, so there is a lot of work we have to do to break it down in order to be useful. So the suggestion we have is to use that RRC lease ID to tie mineral appraisals to your units. Remember that the units are tied to the wells, and those wells have an associated RRC lease ID. So now we can start to tie together all the various data sets just to one single shape, which is the unit. Now, this also obviously will allow for the solution within either a GIS program or an analytics tool, to allow you to high grade by active wells, DUCs, PUDs, and values, and now the ownership information tied as well. So if you're in ArcGIS, it's called a related table. If you're in something like Spotfire, again, it is a related table as well. You just have to tie it together by that unique identifier, which is the RRC lease ID. Now, you can always take this a step further, and you can multiply, the different valuations or the PV10s of the units you came up with by that ownership decimal and get a valuation per owner per unit. Okay. So let's take a step back and let's kind of repeat these steps. Step one is to tie the additional well data to the units, right? So using that units are by API number, we will take the various well information and tie it to that unit. Things like RRC lease ID, number of unique APIs, etc. We will then create additional value, such as valuations, PV10s of producing wells, DUCs, PUDs, etc., on that unit. Right, that's another thing we're going to tie in. And then we're going to use the RRC lease ID to tie that unit to our Texas mineral appraisal. And then again, we can add additional columns onto the mineral appraisal database to give you value per owner. Now, I'm trying to show this inside these two pictures. The one picture inside the bottom is basically me clicking on a unit and showing that there are X number of interests within that unit. I then added in a column that has the value based upon the decimal ownership and the value that I created of that unit. Very, very simple, but again, the steps are 3 or 4 to be able to get there with it. Now, within the Enverus system, you can always just click on an individual well if you want to, and the mineral appraisal is already tied to it if you're just looking at a well-by-well level. Now, by creating a system such as this, your BizDev reps can better find owners' assets and values regardless if it's inbound or outbound. You can also send out more targeted campaigns as you can now filter down to the owners that fit a specific investment thesis. The addresses are also tied to the mineral appraisal data, and you can filter those based upon who you want to target, send it to either the post office REST API or another mailing service, and you can nearly automate an outbound lead gen flow through this system. Now, some of you with high tech skills, or hiring of a third party can also tie this back to a CRM to track activity of the leads that you send out or that you receive. So at the end of the day, right, what we really want you to understand is that the data internal to the Enverus system is not limited to a standard workflow. There are derivatives of the base data that can help you create a very simple yet powerful lead generation tool, to help you better target owners. Now, remember that, the mineral appraisal data with that, ownership information and the addresses, you can always do something like, let's say that a hurricane hits an area. You could say, okay, I want to target owners that live in this state, in this city, that have interests in the Permian Basin. And the main reason is that mineral interests for most owners is very difficult to get any type of debt or, bank to loan against it. And so it's just kind of an asset that's just, paying them every month. And if something happens, whether, farm equipment breaks down, a weather-related event happens, they lose a job, mineral buyers are there to provide liquidity to the seller. And so, by being able to track some of these different, events that go on across the country, you can even further refine down the data. We used to, target, what the crop yields were going to be up in the Midwest. I'm from Ohio, and so things like corn and tomatoes were really popular to grow. Well, if it was a bad season because of weather, those farmers have less income, and their royalties are only paying monthly, but yet their bills, right, are generally much larger. And so we could provide them liquidity by buying a portion of their royalty stream to help tide them over, because again, their main day job was farming. So there's just kind of these small things and nuances you can pick out, to again use this internal database of mineral appraisals to target people a little bit more effectively. All right, now that was all for Texas. Now what about Oklahoma, the other big mineral state? So Enverus has been hard at work to enhance our Oklahoma mineral offerings, and we are releasing some updates soon that will increase workflow capabilities. So after acquiring OLR, Oklahoma Law Records, we set out to create the optimal Oklahoma land view. First was bringing apps and orders together with their respective shapes. This gave a 3D representation to the paper format most people are used to seeing. Next was the release of our spacing data set. Future, so months, not years, is the tying together of respondents to the data sets we've already created. Now, to have a similar workflow as in Texas, you can tie the orders to wells using the Oklahoma completion form, and then respondents are already tied to the order. So again, we have mineral owners tied to units, which are tied back to wells. And you can use the wells tied to the orders to filter out, in a very similar format, highest value to add areas of interest. So find respondents that have been included in an increased density order in the last 30 days, right, is an example. The one thing that respondents does not give you is the percent ownership. However, using the land track lease database we talked about, you could spatially intersect the leases with the units to get an idea of ownership. Again, C's get degrees, not going to be perfect, but can at least allow you to filter out owners you don't want to talk to. Now, for those of you that are involved in non-op working interest, because that is a part of the non-op world, and not just minerals, this tying of ownership to the order should also help you get ahead of that countdown clock to consent for your working interest portion, or to buy out an owner's working interest percentage. So we're far from done in Oklahoma, but these new data sets and workflows can help you better identify the owners you want to target. Courthouse. So we know for many, the data we have is either not, in quotes, up to date enough, or doesn't give enough depth to what an owner actually owns within a unit. With Courthouse, you can tie together the actual filings to the unit. So you could download all the pooling orders for the last 24 months and then attach to the unit database we've been discussing. Now, when you click on the unit within your GIS program or analytics tool, you get valuations on the unit, upside potential, things like ducts and PUDs, ownership data from Texas Mineral Appraisal, and the actual pooling order, with the owners, leases, and decimals that are already associated with it. So with the Courthouse data, you can go further by finding mineral and royalty deeds that have been filed to ensure that who you are targeting still owns what you think they do. And you can also check to see what the competition around you is thinking of targeting by looking at who is buying those, right? And it's always good to know who is in your backyard. So as we showed during the first part of the series, many buyers are private, but you also have to contend with operators and larger shops buying around you as well. And it's never fun to play in an area with a disadvantage, to an operator who owns all the title and ownership information already. There's also additional value add data points that are still, part of the energy spectrum, but outside of what most, mineral investors think. So Enverus is an energy analytics company. Non-op buyers are those that buy up mineral, royalty, and working ownership. Many of you think, of yourselves as an oil and gas non-op buyer, but in reality, you're an energy non-op buyer. And the same skills you use to buy the subsurface and even some surface rights for oil and gas can be applied to other parts of the energy chain, and we're going to talk about that next. Now, inside these two pictures I have up here, the upper right is just showing, those filings of unitization orders over the last year, just to give you an idea, where those would be. And then the bottom one is showing this idea of a unit, the mineral appraisal associated with that unit, and its pooling order all together. So again, I can click on a unit, see who has ownership, see their valuations, and pull up the pooling order as well, just to verify, that everything, still checks out. All right, so parcel owners. So minerals and non-op is getting crowded. Not too crowded, but it isn't easy or as easy as it once was. Shops are having to get more sophisticated than ever and sometimes cutting their margins very, very thin. There is a lot of room to play in other parts of the energy spectrum, and to use the skills we all have. So back in the 2010-ish timeframe, I was working with two guys that had left real estate after the crash and were using their skills to buy up surface rights in Ohio to drill disposal wells. They were using their real estate background to negotiate surface leases or even sometimes buying the land outright. They were filing for disposal permits but had no intention to actually drill them. They ended up flipping the permit and the land to a midstream or disposal shop for many multiples of the initial investment. Now, funny enough, when they started doing this, there was a 2-year moratorium on disposal wells. So that initial flip that they thought they were going to get went up 10x, right? Because they had permits that nobody else could get. Now, the two gentlemen that actually were doing this now run a multi-billion-dollar energy company and have sold multiple entities over the year. So all this to say is that just use the skills, from your understanding of the non-op space today and find a niche. We're not saying to quit the day job, but to take some time to see what other parts of the energy world you can play in. So renewables, wind, solar, etc. are popular in Texas and Oklahoma, and they require surface rights and leases, that can be a bear to negotiate and to aggregate. And this is one of the many reasons why it's so important to get the surface rights when you get the subsurface lease. It's not just for midstream opportunities anymore. And using Texas, the national database of wind farm locations, I put a picture up here in the bottom that shows where there's oil and gas activity, rigs specifically, that overlays with alternatives, to kind of determine if there's a secondary play available. And there is. There's a lot of overlap between these two in terms of where they play. The same can be done with solar. So surface ownership can be determined by looking at Midland maps, which are within the Courthouse database and DI Web. So the upper image is trying to show surface ownership using our Midland map database. I circled the two disposal permits that are, again, require surface ownership. And then I did courthouse filings a right-of-way, meaning that for those two activities to take place, the disposal and the right-of-way, you have to know who the surface owners are. And again, that data set is already included in most people's subscription, and if not, it can always be added on. Midstream, and disposal do require surface rights in most states, and right-of-way obviously does, right? Now, most are within the same bounds of oil and gas activity and, can be worse than money, if bought at the right price. So plant pipelines and stranded assets can be found using the midstream database internal to Prism or DI Web. And stranded assets need to get on pipe because of the cost. And so by locating large pads, of potential areas that are being developed, you can buy ahead of that excavator, right? Not ahead of the rig, but ahead of the excavator to determine where that pipe is going to go. And the main reason is that midstream will take the path of least resistance when building a pipeline. And so if you already have a bunch of right-of-way leased out, they're willing to go that direction. So again, just a kind of a small recap on this, all we're trying to say is that there's other, parts of the energy spectrum that non-op buyers can play in. Don't quit the day job, but it's not going away, right? Solar, wind, it's going to be staying around. Texas is a great place for it. use it, to your advantage, to try and get ahead of it. It's substantially cheaper to play in. There's a lot less people playing in it. But, it is something that you can do with the skills that you already have today. So a bit of preview into next time. So we're going to be focusing on due diligence and de-risking leads once they've been qualified. And I'm going to be passing off the reins to Rob Zimmerman for this one. So I appreciate everybody joining me for the first 2 parts of the series. And I'm always here if you need to discuss anything. So feel free to chat in any questions, and I'll be answering them personally after the webinar. So thanks for spending time with us, and have a great day.